What's up, guys? Hope you guys have been doing well. So today's a very, very important video as I was taking a break from social media, but this was so important that I had to create this video for you guys. So let's get started. So let's get into the mind frame of a typical retail trader, right? So someone who doesn't really do it professionally. So as a retail trader, they tend to trade on shorter time frames. So they scalp on a second chart, minute chart. They sometimes swing trade on hours. They trade on leverage, which leads to a lot of liquidations. As a month before, was it like a couple $1 billion worth of liquidation happened after that Bitcoin drop? And they focus on P&L, right? So the dollar amount. So what does this mindset lead to? It leads to 95% of people losing money. And for the 5% of retail traders that are successful, they either break even, they gain a little bit of money, or they do really good, but they still underperform the smart money, as the smart money has more capital, or the retail trader gains a lot in small spurts and they tend to be more inconsistent. So the question becomes, do you want to play a game where you have a 95% chance of losing with these strategies? So for most people, they'll probably think, hell nah, man. Why would you play a game where you have 5% chance of winning, right? So how do we increase our odds and to make more gains? That's to play like smart money. So here's how smart money plays. They focus on higher time frames. So not on seconds, minutes. Maybe some professional scalpers do, but that's very rare. Less of hourly, but they focus on higher ones like daily time frame, weekly, monthly. They base it off of fundamental news dates that minimize leverage, because when you minimize leverage, you're going to have less liquidations, and that's the name of the game, right? Just staying in the game long enough so that your assets appreciate in time. And they focus on not the P&L, but accumulating high quality, fundamentally strong projects, right? So they want more Bitcoin, they want more Ethereum, they want more Curve, they want more Polkadot, more EDA, etc., as opposed to making the quickest amount of money possible. So this leads to the majority of them getting crazy gains and controlling the market's flow. So another question would be, wouldn't it be more advantageous to be on the side of the people who control the flow of the market and who are more profitable long term, or to be part of the 95% people that lose due to having the other strategies? So if you want to be a part of the smart money, here are 3 big tips on how to play like them. Alright, so tip number 1, the best way to make gains is to survive, aka preserving your capital. So this is especially relevant now with all the money printing going on. So if you have any asset that depreciates or just deflationary stays the same, like Bitcoin with a limited supply, which decreases in mining over several years, or Ethereum where they're tending to scale out, etc., or pretty much just holding on to anything that has any strong value, it will appreciate in time as will be more money supply in the different traditional fiat currencies like the US dollar. So by default, it increases in time. So an exercise you could do is to check your trading gains if you do actively trade. If you didn't at least 10x your money in the past 1.5 years, 2 years, then consider trying these other methods, because if you dollar cost average on these Bitcoin Ethereum dips, then you're probably at least 5x your money, or more moderately conservatively 10x your money. But Ethereum literally did 40x and Bitcoin did 15x. So use higher time frames. So don't just analyze on a second, minute, even the hourly chart. Analyze on also the daily, weekly chart too. And try to limit your leverage. So black swan events in crypto aren't really black swan events. You know they're going to happen. There's bound to be some US Congress member that does some FUD somewhere. maybe an exchange hacking happens or something. This happens regularly every 1 to 3 months, right? So it doesn't matter if you literally 10x your money, went from 10K to 100K. If you have bad capital management, you just end up losing that on some random black swan event, right? So try to limit your leverage and have enough so that even if you use super low leverage, or ideally you won't use any leverage at all, you just stake the coin so that you get the leverage benefits without the leverage risk. So if you happen to use low leverage, then put it below levels where these banks and institutions can't take you out, right? So Bitcoin's at 50K, then protect yourself to not only 40K, but 35, 30, 29K, etc. All right, second tip is to let other people work for your money, right? Let the 95% of people that lose their money make you gain your money. So lend out your assets to make money for you. So you can lend out Bitcoin, Ethereum, even your stable coins like US dollar, USDC, USDT, etc. You can use that on Aave, or you can make money off transaction fees, right? So whether that be people buying to use leverage or using other assets. So this could be a wombo combo, right? So you make money on people using your assets, and then you also make money on them buying to use those assets. So transaction fees. So a great platform is Curve and Convex Finance, which is a derivative of Curve, which is like a yield booster, so that makes your curve goes up, curve gains go up as a TLDR in summary. The third tip would be to accumulate strong fundamental projects on dips, so dollar cost average to them instead of trying to chase these meme coin pumps. So there are cycles of patterns, right? So in crypto, that could be maybe NFTs become popular for some time, then decentralized finance becomes popular, then Bitcoin as a gold narrative becomes popular, then Ethereum becomes popular, then Ethereum killers become possible, then gaming, some random, then meme coins become popular. There are cycles, right? So it's pretty hard to capture all these cycles, but if you just dollar cost average into rate projects that you like, eventually there will be a time where its popularity rises, it pumps, and then you sell on those pumps, and then you get back into great projects that haven't had their hype cycle yet. You get back into those, and then they have their cycles, they pump, you go back into other coins that you like. You just repeat that over and over. So while other people are chasing pumps, that's when you sell. When other people are super fearful, they don't want to buy, you buy because you know that the project you're into is great fundamentally, so they'll last a long time and they'll appreciate over time. So you buy on those dips. So to summarize, the reason why these three are so powerful is because you win in the long game. So everything's appreciating, everything's inflating right now. So the longer you hold on to very valuable assets, the more it appreciates in time. So while everyone's getting liquidated, everyone's trading short time frames, you're just chilling while your assets grow for you. And secondly, you're protecting your emotional capital. There's less stress, so you make better trading decisions, right? So it's easier to make a better trading decision for most people when you're trading on a daily, weekly chart, as opposed to trading on like the minute, hourly chart, right? So trading on the shorter time frames, like the seconds, minutes, hourly, leaves you susceptible to random patterns on the charts, right? So for example, a whale could just dump for 10 minutes, and then that causes the market to go down for maybe a few hours. However, if you trade on a daily chart, it won't really matter. It'll probably rebound within the next day or so. And lastly, you're making passive income off of transaction fees and people using your assets. So isn't that powerful, right? You're lending out strong fundamental projects that you know will appreciate in time, and then you make money passively off of that by people using that, and then you get into projects that you make money off of transactions fees off that platform, so you make money off of people being active, and then you could withdraw your lended asset anytime whenever there's a big pump to get into other assets, right? So it's like literally 4 ways to make money on your assets. So super powerful stuff. So hope these 3 tips help, and talk to you guys next time.